Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. and Canadian markets. Using the tools available on StockCharts, we'll look for long time frame trades. Don't forget to subscribe to my articles and Twitter feed for intra-week updates. And we have ourselves a pretty interesting show today. I think you'll really enjoy it. On our agenda, we have the big picture is that this bond market move is pretty extended, and we want to be, the Wayne Gretzky trade where we set up for what's coming, not what's happened. And usually when these yields reverse, we usually get a big move in banks and insurance. And so with that, we want to cover off how the charts look in banks and insurance. And there's a couple of things here. So let's just say that the bond market actually had a big problem. What we would worry about is that the market was going to, we would see the banks not do well. What we want to see is as yields reverse, we want to see globally that the banks start to pick up. And so I have a special guest who's a friend of mine from Toronto. And Aleks is a student at Ryerson University. He is studying finance, but he's also taking his CMT. He works on the Canadian CSTA, which is the Society of Technical Analysts in Toronto, helping to run the chapter there. And he is a student organizer for the CMT Association in Toronto. So he's got lots of background, but he's interning this summer as an intern as a financial analyst for the banking sector. So I think Aleks is going to have some interesting insights for us today. And so we're going to have a nice dialogue just going through some of the banks and financial charts, and I think that'll help a lot. To set the stage for it, I want to cover off one particular chart. And this chart that I've got here is the 10-year U.S. Treasury yield. And one of the things I'd like to point out is that a lot of times this chart will reverse mid-year or end of year. And for those that have followed my shows quite a while, I've noticed how I've pointed out in the past how many times this inversion has happened. But one of the big things is we have a couple back in 06 and 07, and they were kind of middle of the year that they inverted. Now, sometimes they invert down, sometimes they invert up. The big point here is we are way down in this bottom right-hand corner. And you can see on the PPO that we rarely get to these sorts of levels. So the last time was the first time was 09. In 2010, we got down here and we had more financial help, quantitative easing from the Fed. In 2011, we got down here on the European financial crisis. And I think that was the one where it was Portugal, Italy, Ireland, Greece, and Spain. So those were all problems. And then we bounced out of here. And then in 2012, we announced, or the Fed announced globally with the rest of the central banks, global QE. And it was called QE Infinity at the time. And it took off to the moon. And when we had that kind of kick in, that was a pretty big event. Now, the point I want to make is that these charts reverse near the end of the year or the middle of the year, and it's at least a place to be watching for, especially with this big oversold level down here. So now that we're here, we want to go through some charts and just show you kind of currently how they're set up. Aleks has some nice charts prepared for you, but we'll try to do them in clusters. So we'll cover off some U.S. stocks. There's a reason to cover off the Canadian financial banks. They're traded in the U.S. as well, but they also give us some insights, and then we'll perhaps look at some asset managers and some of the insurance as well as international bank charts and try and see our way through that. So with that, I'm going to ask Aleks to join the party. Aleks, are you with us?
Yes. Hi, Greg. How are you? Good morning.
Hey, good morning, Aleks. Thanks for joining us. So, Aleks, if you could share your screen with us, what we'd like to talk about, first of all, is let's just have the main layout of your charts and the reason that you pick the indicators you do. And then let's work through, and then we'll get into the actual data, but maybe explain how you set up your charts and why.
Okay, awesome. So for RSI, I use a 5-period RSI. Reason why is I just find it's easier for me to kind of allocate with when it's oversold and when it's overbought, and it's easier to draw the trend lines. I've also used 10 period moving average as an overlay on my RSI to help me also kind of determine a trend change. And I'm a big fan of volume by price bars. I use those a lot. And for my moving averages, I use 50 week EMA, 100 week EMA, regular 150, and the 200 day. And down here, I use MACD. I'm a big fan of PPO, but the reason why I use MACD is it's easier to, when talking to other, mostly institutions and all that, MACD is one of the ones that everyone's more familiar with. And then for the MACD histogram, I use that mostly for determining divergences. So that helps a lot. And then a 10 period moving average as well to determine a trend change. Big fan of the scooter. I think it's one of the most important indicators that StockCharts has to offer. It's very helpful in determining where a stock is in quartiles. I look for that key move above 75 to determine if it's trading in the top quartile. And also some indicators, probably the second most important one that I like is relative performance. So I'm a big fan of relative performance because I think that relative performance tends to be a leading indicator in determining when a stock is going to fall or rise. I like to use it as kind of the smart money indicator because it helps us determine when money managers are allocating capital, they obviously want to allocate the top performing stock and to beat the indices. So it helps us determine that. In today's show, the relative indicators that I'll be using is against TSX, the XFN, which is Global Financial ETF listed in Toronto, the XLF, and the SPY.
Excellent. Okay, so with that, perhaps let's start on the American financials, and let's cover off some of the biggest ones. You got Bank of America on the screen. That's a great place to start, and maybe just walk through what you're seeing on that chart now.
Yeah, so with Bank of America here, what we have is we have a lot of clearly have the main resistance point up here around 30, 31. We failed multiple times there. Again, we came up on February, March, we moved up slightly. We tried again last August, and we just kept trying. For the most part, Bank of America has held in nicely compared to some of the other banks. And we traded down all the way at the end of the year. We held the 200-day, which I really liked, and then we came back and we failed again around that 30 range. But what's starting to get interesting for me is Bank of America is more or less, if you look at it how I like to see it, made a higher low here from the 200-day. We didn't come back. We didn't violate the 150. So we held that, and now we're making a move up again. So what I really want to see from Bank of America is a move above $32. And but it's still in the range with the scooter around 40, so it's not a top performing quartile name, but it's definitely one to watch because when it does start trending up, as we can see back in the end of 2016, right? Once we get a move up, Bank of America tends to be a good beta trade.
Okay, and then just to make sure on these moving averages, they are set up as the 50-week, the 100-week, 150-week, and 200-week.
Yeah.
Okay, yeah, just to make sure they're not, you mentioned daily, but I think they're weekly, yeah. So,
yeah, all weekly.
Okay, great.
And what's also interesting on Bank of America to point out here is on the MACD, we've actually have a positive divergence here. So we actually have momentum to the upside here. So momentum is positive. And again, with the scooter, we're still below 75, which is kind of concerning. But again, it's not when we do get a move in these in Bank of America, as you can see here, right? Once we move above 75, we'll stay there for quite a while, and it is a good trade. So that's something that I'm watching as well. And if you take a look at actually Bank of America here. So I like to also, I don't know if I mentioned this. So I use a 50-day moving average overlay on all my relative performance indicators. And the reason why I use that is it tends to be a good way to determine a trend change in relative performance. So if we look at Bank of America back here at the end of 2016, once it went up above the 50-day moving average, we tend to hold that for quite a while and get some nice outperformance, right? Currently, right now, we're below the 50-day moving average, but we're testing the top of it. And it's
just to make sure, that's the 50-week moving average, yeah.
Yeah, 50-week, yeah. And what we have right here for both of them relative to all of these is we're below, and the moving average is flattish. I wouldn't say it's anything too concerning, but it's still not a buy signal. I'd like to see a move above that 50-day moving average on the relative performance indicators.
Okay, perfect. Let's jump into some more of the charts, and we'll just start speeding through a few of them here.
Awesome. So then we'll move on here to, we'll actually go to JP Morgan. So JPM, as what I've learned so far interning, is one of the most widely held money center banks, just due to the credit that Jamie Dimon gets over there. We just have here, it's simple. We've been in a range. We made a higher low above here, 96 to 104. But again, I'd like to see a move above 116. The scooter again is 39, and momentum is turning up, which is positive. We have a divergence here. But again, the scooter's below 75. But in this case, I mean, you have somewhat of the relative performance indicators starting to move above the 50-day moving average. So that is positive. But again, I'd like to see it continue up trending.
Perfect.
So then we'll move on to the next one here, which is Citi. And I think Citi is one of probably the more interesting ones that we have here. So we have this downtrend line here. We've had a false breakout here above 71.48, but now we actually look to be trending up. We have a nice positive divergence here. And Citi actually has a scooter of 76. It's not really talked about too much, but it's one of the higher scooter in these money center banks. We have this momentum downtrend line here that we broke, and momentum's above zero. And if you actually look at this, what I wanted to point out is we have multi-year highs in the scooter. And once we tend to get a move above 75, it tends to be a good indication of something that's boiling up. And if we take a look at these relative performance indicators, you can see the moving average is starting to slope up here, right? So we're actually looking good on all of these. And it looks quite interesting to me. And I think that something's happening over at Citi for sure. I don't know if you had any thoughts about that one, Greg.
No, I like that one a lot. And that's a great chart. I mean, it just shows the relative outperformance, so it's perfect. What other ones have we got? Have we got Wells Fargo or? Yeah,
so we'll look at Wells. So this one, I guess, is the most notorious one for what's been happening down at Washington with the banking sector. But again, what we have is we have a clear downtrend here. We're below all the key moving averages, and I mean, we have some support here around 44, but again, Wells Fargo isn't screaming a buy to me. You have a scooter of 18. You have this momentum downtrend that's broken, but again, momentum still below zero. And this is something else to look at, which is pretty interesting. If you look at Wells was never quite a good relative performer to any of these key ETFs or indices. Wells was always, it had some moves where it trended up, but for the most part, Wells was quite an underperformer. And again, if I were to look at Wells, I would need everything, I would need to be above the 50-day moving average on these relative indicators.
Okay, perfect. With that, we're going to take a quick commercial break and we'll be right back. Hey, we're back, and we're back with Aleks Bozic, and we're going through financial charts. We've just covered off some of the main U.S. Financial companies, but now we're going to break into some of the other ones. And one of the reasons to do that is we want to see globally the whole push. And Aleks has some more information. And where are we going to now, Aleks? Which charts do you want to cover?
So we'll take a look at actually some of these insurance. We'll take a look at some of these more investment banks quickly. So Morgan Stanley is a really interesting one. I find that these tend to be a good indication if we're seeing some outperformance. So Morgan Stanley here had a great run from the end of 2016 all the way to 2018. And we had quite a bear market on the stock. We look to have found some support around this 200 weekly MA, around $48, and we're looking to push above all those key moving averages. Again, the scooter is around 26, so I would like to see a move above $50 to get back interested in Morgan Stanley. But I think Morgan Stanley fundamentally is an interesting one too, because they've been getting a lot of business on the investment banking side down in the US. They've been taking quite a lot of share from Goldman Sachs and quite some other banks. If you actually take a look at most of these IPOs that have been coming out, Morgan Stanley has been a key underwriter for a lot of them. And if you take a look here on the relative performance indicators, we're still below the 50-day moving average. So I would like to see that turn up again before I would get interested in Morgan Stanley. But I think it's one to watch for sure.
Great.
And we'll take a look at another one, which is pretty key one, is PiperJffreys. So this one's held in quite a bit better. We've been in a range here for quite a while, and I tend to like these charts when we get when volatility has been quiet for quite a while. It tends to be a good indication if we're going to get a move up or down. PiperJeffreys, we have resistance around 80, support around 70 right now. So again, I'd get interested if we make a move above 82. I think that we can quite see some beta in these. Momentum is above 0, but we have that PPO sell signal. And if you look at this too, which is kind of interesting, we broke this long-term trend up in the scooter. So that's a bit concerning. Relative performance, it's held in quite better than Morgan Stanley, but still it can't seem to get above the 50-day overlay on these relative performance indicators. And if we'll take a look at some of these insurance ones too. So I think insurance is a really interesting sector because insurance stocks have done quite well recently. And it's interesting because fundamentally, if you look at it, they shouldn't be doing quite so well looking at what the 10-year yield has done, but they've been considered to be a safe haven. And Chubb is a name that's been quite a relative underperformer compared to some of the other insurance stocks like Progressive, which we'll cover next. But what we have basically here is, from my looks, a cup and handle. We have a nice bottoming pattern. We went above. We tested 150. I think we still need to clear some supply above. But if you look at today's action too, we look to be testing above. So I'm looking for Chubb to break up above 150 and for a move higher. Again, momentum's above 0. The scooter, we broke this trend line, but again, I'd like to see a move above 75 in Chubb. Relative performance here, as you can see, that's why I like using this, is you get this move up, right, once it starts turning up, and it looks to be turning up on relatively outperforming all of these, the XLF, the SPY. So I like to see that. Now, if we take a look at the main, the strongest insurance company down in the US, which is Progressive. Progressive has been a beautiful stock to hold for a very long time. And what we've done here is we broke above 70. We came back, we retested around 71.52, and we've just been holding this nice uptrend line here. And we have a scooter of 91, which is just amazing to see in this. Momentum's above 0. And if you take a look at all these relative performance indicators, you'll see it's from left to right, nice outperformer. So I continue to like Progressive on the insurance space in the US, and I'd be looking for Chubb as a catch-up player.
Perfect. And that scooter's been nice and strong. That's good.
Yeah, it's been quite. I don't think it's fallen below 50 for quite a while, so it's been quite strong.
Great.
Do you want
Okay.
to take a look at the Canadian?
Yeah, let's go through 2 or 3 of the Canadian ones and then try and hit some of the European institutions.
Okay, awesome. So if we take a look at, I guess we'll start off here. So CIBC, well, Canadian Imperial Bank of Commerce, but as we like to call it here in Canada, CIBC, has been quite a laggard, and fundamentally, it's proposed to what they have on there. They're very heavily on the mortgage books here in Canada as a bank. So that's been quite a weight on the stock. And if you actually take a look at it here, and they reported a lousy quarter on the last one, but we're still downtrending. I mean, we've made a higher low here. We've managed to hold the weekly 200-day, but it's quite concerning looking at that we're below the 50-day, and we're starting to see this 50-day creep down, which is concerning for me. These banks are looked at. I mean, you have a yield of 5.23%, but I wouldn't be looking at a bank like this for a yield play, considering the position where it's at. We have momentum. We have a negative divergence here, which is concerning. And if you take a look at the scooter, we're just downtrending like that. And this is where I kind of like relative performance, in the sense, if you look at relative performance, once we came back below here, if we take a look at that, so that's in December, right? Once we went below the 50-day moving average, it tends to be a leading indicator of what price does, right? So relative performance started falling off here. And once that started falling off, right, we saw the price dramatically drop here. So looking at all of this, it's a huge laggard, and it should be one to stay out of. Now, if we take a look at the strongest bank here in Canada, which is Royal Bank of Canada, which has very good U.S. exposure, and it's done quite well, and it's one of the fun favorites here in Canada. We have a breakout around here, 102, 103. We came back, retested. Now I guess we're chopping through some resistance here around 107. But again, it's a scooter of 63. It fares much better than some of the banks, and we have momentum that's positive. And if you take a look at this, here in the TSX and in Canada, it does well. It's a good relative performer. But in the US, it's not quite well. It's kind of falling off here on XLF, and it hasn't done well relative to the SPY. So that's also one that I wanted to highlight. And then the insurance stocks that's very interesting here in Canada is Intact Financial. So Intact Financial, it could be considered a progressive down in the US. It's the strongest insurance company that we have, and we broke out above here around 114. We're uptrending, and I continue to like Intact. If you take the momentum here, momentum's positive. It's uptrending, and the scooter is just beautiful as well, above 75. Continues to hold above that 90 range. And if we take a look at some of these relative performance indicators, again, all we're seeing is a nice move up steadily, making new relative highs to the TSX, XFN, XLF, and the SPY.
Beautiful. Okay, let's cover off some of the internationals. We got about 5 minutes to go here, so let's work through a few of those if you got them.
Yeah, so we'll take a look. Actually, first one, I guess for the poster child of the European banking sector. We'll take a look at Deutsche Bank. So I think everybody kind of knows what the problems are over at Deutsche Bank, and it looks soon to be that the U.S. division will be completely cut out. I know they were talking about the capital markets division looking to get cut out down there, but yeah, you have a scooter of 19. We had some support here around 790. I mean, you're looking, but once we broke that, we came at 661 here. We're testing it. It's up today, but if I take a look, I don't see us breaking above here at around $8. So again, momentum zero. You can kind of look at this scooter downtrend. Yeah, it's breaking above that, but I mean, if you take a look at relative performance, this is just ugly. Like it's, I don't know how this situation resolves down in Europe, but it's not quite the best chart down in the European banking sector.
Perfect. And then any others?
Yeah. So actually, I'll take one that's kind of nice. So this, I'll butcher the name on it, but IC Bank, I believe that's an Indian bank. I'm not too quite familiar with it, but if this is probably one of the more interesting ones. Again, it's the scooter is 60, 70 around there, but I mean, we broke above $11 here, and we've been uptrending quite nicely. So I like that. And if you take a look at some of these indicators down here, we have momentum is trending up nicely. It's above zero. The scooter, again, is holding up. And this is what I like to see, is all the relative performance indicators are making new relative highs, and we're uptrending and above the 50-day moving average. So again, I mean, you have to pick your spots in financials. Insurance companies are definitely a good thing to look at, but there are some international banks that are doing well. It's just you kind of have to pick and choose. And I want to cover off, one more thing, because this is what I thought was very interesting. Not a lot of people know about this company. So this is a stock called Integrated Asset Management. I actually had to go and I had no clue what they do, but what it is, they're asset managers, but they focused on a lot of collateralized debt. They look at a lot of debt deals, but what they also look at is to hire the best money managers for each asset class. So the best guy in real estate, the best guy in tech. And if you take a look at this stock, I mean, this has been a hell of a performer here in Canada. We've had consistently higher lows, higher highs, momentum positive, scooter above 90. Some of these relative performance is just unbelievable. So there's always sweet spots in financials. I mean, this is obviously much smaller cap, but there's opportunities. I guess it's just kind of picking and choosing what you want.
Perfect. That's a beautiful chart. And Alex, can you just show everybody where you found the scooter information when you hadn't been looking down at the scooter line, because you were up in this top part of the panel and you could show people what the scooter level was? Where did you see
yeah, for sure. So here, below the yield, we have the scooter for the TSX composite. So here it's a 94.6. So
perfect. Alex, thank you very much for covering this off. We have I think we're going to get a nice trade here out of the financials. The way the interest rates are set up, having that big oversold level down in momentum that I showed earlier on the charts, all of that adds up together to being, the Wayne Gretzky movie, go where the puck is going to be, not where the puck is. And I think that's one of the biggest things for us investing, is making sure that we're hunting a trade, know what we're looking for, and when it starts to show up, that we can arrive on spot. And I think your relative strength information helps us a lot. So with that, thanks for taking the time to join me on Market Buzz.
No problem, Greg. It was a pleasure.
Super. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern Time and 7:30 a.m. Pacific Time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. Thank you.
Perfect.